Aloha, everyone, and welcome to Java. Thank you for joining me. This is Sunday for October 1st, 2023, and a look ahead for the week that's coming. So, as usual, I'm going to guide you through a few things that are going on this week, as well as some things that we need to be looking for in a little bit farther future. So, with this, we've got the economic calendar out for this week. It's mostly manufacturing data. We've got Fed Chair Powell is speaking on Monday, which is a little unusual at 11 a.m. That's potential mover for the markets. We've got crude oil inventories on Wednesday. And most of the rest of it is labor related, either jobs or unemployment rates. So, with that, I'd like to go over with one of the main concerns going forward is a liquidity crisis. And this is over the money flow because a high cost of money equals less spending. And that is basically leading into recession slash depression, depending how deep it gets. So the high cost of money is if you look at your credit cards, the amount of interest that they're charging, or if you're getting loans, the percentage rate, whether it's for a new house, car, or anything else. So credit is also being halted to both businesses and individuals because banks are unwilling to loan. So technically, we are in what's called a balance sheet recession. And that just means that companies and consumers have high levels of debt and they really want to pay off that debt at these higher interest rates and cut back on their borrowing, so they don't want to spend anymore, and they cut back on everything. They also companies cut back on their inventories. So this could cause what we call a liquidity trap. So under a gloomy economic outlook, both consumers and banks, as well as companies, are pessimistic about the future. So they look to try to either increase their savings or at least stop spending it. And they don't want their discretionary spending goes to nothing. So in recessions, banks are much more reluctant to lend. So it kind of locks up any capital that companies or individuals can get. So we're in the midst of that now. I've got some points I'd like to go over. The Fed is predicting that Americans will be out of savings and cash by October, by the end of October. So that kind of feeds into this liquidity crisis. We've also got student loan payments are due to resume in the month of October, and the Fed's preferred inflation gauge ticked higher in August, meaning that they are going to entertain that idea, if they are indeed data dependent, that they would raise at least a nominal amount, quarter point again, prior to the end of the year. They're talking about possibly November. And with the oil prices going so much higher, that drives inflation. So I think it's very possible that they will do one more rate hike. In fact, I was wrong because I called that they would do one more rate hike in September, and they chose to pause. However, we'll see what they do going forward. Congress averted the US government shutdown just in time. And they haven't fixed things, they never do, but they just kind of bought forward 45 days. So we'll still keep hearing about this, but at least they should continue to provide their reports to the Federal Reserve, which is what they make their decisions off of. So now I have something that I think is very important moving forward. The EU launched the world's first carbon border tax, and this came off the World Economic Forum site. So Brussels is set to impose carbon dioxide emissions tariffs on carbon intensive imports, including fertilizers, aluminum, iron, steel, and cement. So at the base of this, what it does is it kind of makes people not buy these imported products. They want to get it locally, but it's going to end up hurting them. And so what they've already said is that they can choose to either implement these or not. And my question is, if this is supposed to be for climate change, and these are the high numbers and they're doing these carbon offsetting, should it matter whether people purchase it or not? I mean, that would crush the demand and then be better for the environment, but that's not what's going on. So this is another way to do a trade war. If you tear that away from the language that they've got covering this like frosting on a bad cake, this really It's just another political move and a trade war. So, moving forward to our stories, this just supports what's going on. We see this in the real economy. US consumer spending signaling pain ahead. So a lot of stores are rolling out their holiday goods early because they are hoping that they will get enough revenue prior to the year end that they won't have to close. As we said before, they're not going to be borrowing. They don't have loans available to keep going. So they're trying to push spending in an early run. They know that this holiday season is going to be weak as far as retailers. So they're trying to get ahead of it now. And you'll see this. So if you go into stores right now, you'll see not just Halloween, which is typical, but you're going to see Halloween right next to Christmas on the other side, which is not normal for the United States. So on the other side, we've got this headline: once unthinkable bond yields, now the new normal. So bond yields are rising. This is US government debt. We're watching the 10-year Treasury. We always watch that for the markets because high yields in the Treasury has a definite effect in the stock market. Stocks don't like when it goes too high, it brings them down. And we've been watching it hit 4.5%. Jamie Dimon of JP Morgan is saying that if we hit 7% level, it could be very destructive to the economy in general, and especially the markets. And this is Larry Fink saying that he's seeing it, that it will push 5%. He's the head of Blackrock, who owns many of the larger corporations and a lot more, but I won't go into that now. I will just say that BlackRock basically is the individual arm of the United States government that buys into corporations all of the things that they're not allowed to do directly. So onto our trade and InfoWars. So we've got the Russian oil price cap is not working. So when the United States sanctioned Russia, they put in place a $60 per barrel price ceiling, trying to crush Russia from making money off of their oil, and it's backfiring. So what's going on is there was a loophole saying that it would be on basically insured shipments. So Russia's just shipping and not purchasing the insurance. They're going out and just using their own, basically covering it with their own military, backing their oil shipments. They're shipping to India, to China, and to all of these other countries, and charging prices that are basically at their rate. They're not paying attention to the $60 per barrel cap. So basically, that's cut off the supply to the Western countries, majority of that being the United States and the EU. So they've been forced to source their oil from other parts. So the United States has kind of been seizing some from Iran, some sanctioned oil, and the EU is being forced to repurchase Russian oil that was sold to India at a much higher price. So it's not going to work for long. I expect this to kind of change. When that does, that will have a definite effect on oil. I don't know exactly what they've got in mind, but I will keep you abreast of that, any developments that I find. So, a few more stories regarding Ukraine. So, Biden is demanding uninterrupted cash flow to continue this with the government shutdown. I think he didn't get it for this run, but basically they want to continue. They've got to keep the money flowing. They're keeping the debt going, and this is a good way. So for them, as far as Washington, I'm not saying it's a good way, but they are continuing that debt flowing out because they must continue the inflation. And we're seeing a price rise back at home because of this. And we've also got the UK that wants to send actual troops. So I don't know how that works there, but for the United States, that would be a sign of war, which technically we're not supposed to be in. Congress hasn't declared war, but that would be a direct act. So for the last thing, we've got US elites are stuck in a Cold War. So Russia and North Korea are binding ties as well. They are doing trades in weaponry and drones. So basically trading missiles, drones, tanks, and they have a good mutual agreement going on. Now, Putin is very well aware of what is going on in North Korea and Kim Jong-un as a leader, and they just met recently again. So He's kind of the only one for the check and balance on this, and we're watching more going on. So if you like any of this material, please hit the like button. If you haven't already, I really appreciate everybody giving me so much support, and I would like to wish you all a wonderful day. You can also reach me on Substack and Twitter. And until I see you again, my friends, stay free.